Do you want an approach to assets, property, and profit while dating and married to protect both partners from potential financial harm if divorce occurs? If so, stay with me, and we will discuss how. Greetings, daters of all ages. I'm John F. Whitney, author of the book, I Do, If It's Equitable, a philosophy for dating and marriage to avoid the potential horrors of divorce. I will be your host and your guide as we discuss the I Do philosophy. This is Section 2, Video 5 of 9, the We Owe and Own element of the I Do philosophy. The red square at the right-hand corner of the screen is a subscribe button. If you think I am doing a good job, please consider clicking that subscribe button anytime during this video. The guiding principle here is open and honest disclosure, so that both partners understand the assets and liabilities each has. This disclosure is essential so that choices made will not exceed the assets or further add to the liabilities of each partner. Employment and children decisions can also be honestly addressed from this information. Existing debts might be too great for one income to bear. Therefore, both partners might need to remain working until some debts can be eliminated. Moreover, wants might have to be reconsidered, or perhaps one will have to look for a different partner to provide these wants. Glorious if they do. Let any disappointment come before the marriage, not after. Let wants be put into perspective and be addressed before the marriage, not after. The purpose. First, to determine the assets and liabilities of each person so that each person can respect the assets and help resolve the liabilities. Second, to document property and assets that exist prior to the marriage as they are exempt from the marriage. Third, to put wealth and debt into perspective. For example, presume that one prospective partner has 20 pages of wealth and no debts, while the other has but 2 lines of wealth and 2 pages of debts. Clearly, what each brings to the table is known before they marry and serves as a guideline should they depart. Finally, if this information reveals that your potential partner is chronically unemployed or consistently in debt, better to know this before you marry them, not after. The goal. What's mine is mine, what's yours is yours, applies to the assets and liabilities of both persons. Put another way, you do not acquire my assets or liabilities, nor do I acquire yours. From the We Believe element of the I Do philosophy. Any material possessions or financial gain earned by each partner prior to the relationship remain the sole possession and control of that partner. These material and financial gains are not and do not become accountable to the relationship. Neither partner will expect a lifestyle greater than one his or her own income will allow. Common expenses of the relationship will be met on an equitable, prorated basis. A determined percentage will be deposited into a joint account, and the remaining income of each partner will be deposited into their respective personal accounts. Any and all other income sources are not subject to the prorated expenses, but are subject to the joint account obligation. What remains is deposited into that person's personal account. Rules to follow regarding profit and property while dating or married. I will not expect anything of my partner that I cannot or will not expect of myself. I will not expect my partner to provide any material possession that I can earn for myself or that I cannot afford by my own means. I will not impose a financial burden on my partner or myself. I will not consider my partner as a means to a financial end. I will not obligate the relationship, and therefore my partner, in any financial matter without first discussing it with them. I will not expect to gain more from the relationship than I have equitably earned. I will not expect to leave the relationship in a financial position greater than that I had upon entering it, unless I have equitably earned the same. At some appropriate point in the relationship, a personal wealth and liability worksheet should be completed by each partner. The book, I Do If It's Equitable, offers such a worksheet. Unfortunately, editing software does not accept Word files. No worries. The items on the worksheet can be discussed just as readily. Begin to document the contents of this worksheet for incorporation into a future I Do contract. Assets include bank accounts, real estate, trust funds, annuities, IRAs, certificates of deposit, money market funds, alimony, child support received, property. Liabilities include bad debts, unpaid debts, taxes owed, automobile loans, personal loans, equity loans, education loans, liens, levies, garnishments, alimony, child support paid, mortgages. During this plank of the I Do philosophy, keep a keen eye out for the good for the goose paradox. Now, this paradox is simple. It seems common knowledge that most, if not all women, will adamantly advocate protecting what is theirs, their money, their house, which in some cases an ex-husband paid for, and or their investments. However, these same women will react in shock, horror, and disgust if a man discusses protecting his material and financial gains. Is this fair? After all, what is good for the goose is also good for the gander. If your significant other insists on protecting what is theirs, then you must be able to protect what is yours. A fair but firm stand is absolutely necessary. Remember, the ultimate goal of the I Do philosophy is fairness from and for both partners. Watch also for the if-then correlate. If your prospective partner's intentions are honorable, if their reasons for marrying you are pure, honest, and worthy, if all they seek from a marriage with you is love, romance, and intimacy, then they will not be offended or unwilling to accept the equitable I Do philosophy. We have, share, and divide. Property. Even the most amicable of divorces can quickly become ugly once the divorcing couple begins to fight over things. A cynic such as myself blames this ugliness on the divorce attorneys who earn their income litigating such battles. For example, pets turn into treasured items. He or she might fight for a motorcycle he or she cannot even operate just to spite the ex. Even legal fees become fuel to the fire. Avoid this hell altogether. How? By adopting the I Do philosophy belief that what's mine is mine, what's yours is yours, what's ours will be equitably divided. The purpose is to provide a means of defining and dividing the material gains acquired during the marriage before the marriage occurs. The goal: by strictly defining and dividing property acquired during the marriage, spouses or former spouses should not become adversaries regarding the possession of any item. Rather, the exact percentage of ownership for each item acquired is and has been known. Therefore, during and after marriage, property division should never become an issue of contention. This in turn renders moot the need for attorneys to fight for property that does not belong to you. The ultimate goal is to protect each partner. By strictly defining property division, no partner gains more from the marriage than they equitably contributed to it. The horrors evident in current divorce system should never arise. That is, One former partner should not be financially destroyed by the other and/or by attorney costs. Men should not be driven to violence against the opposing attorney over financial issues. Nor should men be driven to violence against the ex-wife and/or her new lover due to the insult of seeing another man enjoying the fruits of their labor. Women need not fear financial abandonment, as their well-being upon divorce will be discussed and agreed upon before the marriage occurs. Each will retain what was theirs prior to the marriage. Each retains personal savings accounts acquired during the marriage. Both, on a prorated basis, provide for the children. Protecting the children is a top priority. The higher income partner might have to surrender the house for the good of the children. Therefore, the ex-wife need not and should not continually file court motions seeking yet more from the ex-husband. Since ownership in property is clearly defined and divided, the courts need not be clogged with the personal wars which the current divorce system fosters. This equitable solution allows for honor, decency, and kindness to prevail rather than the greed, spite, avarice, and cruelty the current divorce system thrives on. Most important, both partners can begin to enjoy a new relationship with a minimum of interference from the previous relationship. Profit. Obviously, profit from the relationship commences once the commitment occurs. Profit is defined as any material or financial acquisition that the relationship produces. Recall that we believe item 1 assures that the possession and money that each person brought into the relationship remains theirs. The personal wealth and liability worksheet or similar instrument will establish the property and finances possessed by each partner prior to the marriage. This is important, as any item not exempted from the marriage becomes the property of the marriage and will be equitably divided upon divorce. The guiding rule is simple. Anything acquired during the relationship comes at a price for the item. The equitable contribution of each partner toward the possession of this item makes the item possible. For example, let's say she earns 4 times more than he. A dining room set costs $1,000 to purchase. She pays $800, while he pays $200. Upon divorce, the dining room set is sold for $500. She receives $400, while he receives $100. Neat and simple, right? Assessing ownership of acquired property might be done quarterly by some and annually by others. Whenever this assessment occurs, include all material possessions and financial gains which the relationship has produced to that point. Written documentation of some kind should describe the item acquired, its cost, and the percentage contribution of each partner towards its possession. Also document miscellaneous income sources and their obligation to the relationship. And remember, a gift of any sort from any source is not an acquisition of the relationship. It becomes the property of the person that received it. Finally, an annual accounting of all assets and liabilities prior to completing tax returns is probably a wise thing to do. Profit and property acquired by the relationship could be divided annually as well. At the very least, when income changes do occur, the joint account might be divided according to the current equity percentages. For example, presume that my responsibility in equity is 3 times yours. I will be promoted to Vice President of Marketing. My income increase will result in my earning 5 times your take-home amount. Dividing the joint account prior to this equity change assures each their fair share and just amount contributed to date. The joint account can begin anew based on the new equity levels. This concludes our discussion on the we owe and own element of the I do philosophy. Our next topic will be on money and money-related issues. I hope you will join me. If you learned anything of value, please consider hitting that like and share button. Leave me a comment, especially if you have a question, problem, issue, or concern we might be able to solve together. Or perhaps you can assist me in improving my presentations to you. And finally, if you feel that I am worthy of your time and effort, please consider subscribing. And don't forget to hit that bell icon so you will know when I upload a new installment of the I Do Philosophy. Until next time, date wisely, date safely, and remember, I do if it's equitable.